Hello and welcome to Tax Tips. If you drive for Uber, Lyft, DoorDash, or any other car sharing service, you may be wondering how to file your taxes and what deductions you can claim. In this video, we will cover a few tax tips that can help you save money and avoid trouble with the IRS. Tip number 1, understand your tax status. As a rideshare driver, you are considered an independent contractor and not an employee of the company you drive for. That means that you are responsible for paying your own income tax and self-employment tax, which covers Social Security tax and Medicare tax. Tip number 2, track your mileage and expenses. One of the biggest tax deductions you can claim as a rideshare driver is the cost of using your car for your business. You can choose between two methods to calculate this deduction. The first one is the standard mileage rate. The second one is the actual expenses method. Let's explain the standard mileage expense first. The standard mileage rate is a flat rate per mile that the IRS sets each year. For tax year 2023, the rate is 65.5 cents per mile. To use this method, you need to keep a logbook or a record of the miles you drive for business purposes. Those miles include picking up or dropping off the passengers or the food that you are delivering, driving to a hotspot, or going to an airport. You can use a mobile app or notebook to track your mileage. Now, what is the actual expense method? The actual expense method is based on the actual cost of operating your car, such as gas, oil, repairs, insurance, depreciation, and lease payments. To use this method, you need to keep receipts and records of all your car expenses. Tip number 3, claim other business expenses. Besides your car expenses, you can also deduct other costs that are related to your rideshare business, such as commissions and fees you pay for the rideshare company, tolls and parking fees, water, snacks, gum for the passengers, cell phone, internet bills, music streaming subscriptions, dash cam, car accessories, or safety equipment, and tax preparation fees. To claim these expenses, you need to have proof that they are necessary and ordinary for your business and that you paid for them yourself. Let's talk about tip number 4. Pay estimated taxes quarterly. As an independent contractor, you don't have taxes withheld from your paychecks like employees do. Instead, you need to pay estimated taxes to the IRS every quarter based on the expected income and expenses for the year. Estimated taxes are due on April 15, June 15, September 15, and January 15 of the following year. If you don't pay enough estimated taxes or you miss the deadlines, you may face penalties and interest charges. To avoid this, you can use tax software or a tax professional to help you estimate your taxes and make payments online or by mail. Let's talk about the last and final tip in this video. It is highly recommended that you use a tax professional. Filing taxes as a rideshare driver can be complicated and confusing, especially if you are new to the business or if you have multiple sources of income. As a tax professional, we want you to understand how important it is to avoid estimated numbers in your tax returns. Our job is not only to provide expertise in navigating the complex tax laws, but also to assist you in maximizing the deductions that you are entitled to. Thank you for watching. See you again next time. Like and share our videos, and don't forget to follow us for more videos.